Hello Trade Pros, and today we've got another special video for you guys. As you may have guessed on the screen, we're going to be talking about the top stocks on Robinhood, why they're important, what you need to know about them, and how you could implement this knowledge in your investing or trading. So before we get started in today's video, I want you guys to drop in the link below if you guys want a free trading course. So with that being said, before we get into this, smash that like button, hit that subscribe button, and ring that little bell to notify you when we drop new videos and when we go live. What do you guys want to see? Do you guys want to see more Robinhood info, and do you want to see more day trading info? Whatever it is, drop a comment down below and let's get started with this video. So in today's video, we're going to be talking about Robinhood, the top stocks trade on Robinhood, and a few different things around that. So right in front of me, we have this website called robintrack.net. It's the leaderboard portion where it shows us the most popular stocks recently bought on Robinhood. You can see 1 through 151 here on this list, but obviously we're going to focus on the first 10 to 20 and look at these a little more in depth. Now, we have seen that Robinhood has been in the news recently for what we call the quote-unquote retail rally as of late, and it's really interesting to note what the stocks they're buying look like. So what kind of stocks does Robinhood typically buy? What kind of stocks do the retail traders typically buy? And for the most part, they are more inexpensive stocks and stocks that have actually dropped quite significantly. Some that are potentially filing for bankruptcy or have filed for bankruptcy. So it's important to see what the mind of the retail trader looks like if we're going to take advantage of that in our investing and trading goals. Now, we're going to cross-reference some of these with what we've seen the Fed actually do. So we're going to build up an interesting bias based on that, because we have recently talked a lot about a potential downshift in the economy and the market for another round, another potential test of lows. And we're going to see how this Robinhood rally may or may not influence that, and where we could find value, where we might not be able to find value. So let's go ahead and start this off. You can see the top 10 right here are very well-known names: Ford, GE, American Airlines, Disney, Delta, Microsoft, Carnival, GoPro, and Apple, also Aurora Cannabis. Now, these top 10 stocks are the most popular stocks that Robinhood traders and investors buy. Now, if we take one of these, for example, we click on Ford right here, and you can see the relationship between Robinhood investor holding or trader holding, which is the green line, so number of users actually holding this stock, and the price of it. You can see the reference point right here where they cross, and as the market started dropping, or as the stock started dropping, you see an influx of these Robinhood buyers who actually propelled the stock slightly higher, but they're nowhere near converging yet again. So this is the first interesting point that we should note. And as you see, as we go back, we pick any of these stocks, the user holdings versus the price are going to tell a very similar tale across most, if not all, of these stocks. So this is one of the Microsoft where it's a little better in terms of relationship between one another. You can see they're both climbing well. Microsoft being a super strong tech stock that's pretty resilient. If we look at Apple, it's going to look similar to that of Microsoft. You can see they go hand in hand and move up, which these are considered the smarter plays. These are considered the quote-unquote safer plays. As the market dipped, you can see more investors and traders coming in. Now, if you take an example such as American Airlines or Ford or GE, you can see the number of users skyrockets while the price stagnates at these lows. So what does that tell us? That a lot of investors on Robinhood are just buying this thing because it's cheap, not understanding the underlying issues that American Airlines may have, right? So a lot of these stocks, when you see, this could be a divergence indicator and could help you understand that as users diverge from price, we could see a convergence. Will price rally back up? Maybe not in these certain economic conditions, but this could also divert you from shorting some of these stocks. For example, we just saw GE and Ford. If we look at what the Fed has been doing recently, the Federal Reserve has released a list of nearly 800 companies whose investment grade, as of March 22nd, debt is plans to buy on the secondary market in order to support the financial market. So this is no secret from the Fed. Thanks to Investopedia over here, we can see the top 100 companies whose debt the Fed is actually buying. And if we take a look at the top 15, what do we notice? General Electric Motors, Microsoft, Apple, and Ford was on the list as well, right here, Ford, right? General Electric, sorry, not General Electric Motors, General Motors, General Electric, Apple. We've got a few more, and we can find more information on the rest of the companies. You have 1 out of 7. If you click on Walmart, so and so, you got McDonald's. These are companies that are pretty much being propped up by the Fed to help these financial markets and would not suggest going against, right? We can't fight the Fed. So when you are looking at these, this could be an indicator for traders to look for shorts as we see the divergence and a lot of retail money trying to come into these weaker stocks. It could be a potential short opportunity for a lot of traders. You can see Disney is one of those where users increase vastly as the price hasn't really gone anywhere. A potential short opportunity on the stock as we anticipate a potential downturn here in the overall market and the economy, but I'd cross-reference that with the list that the Fed is buying. We have to see what debt the Fed is buying and who it's propping up in this market. Because as long as the Fed continues to do so, we could see a continued sustained, even slow grind higher in these markets. However, we got to bring it back to the overall underarching theme here, which is coronavirus. And if we start to see an economic shutdown again, slowly pulling back on their reopening, we'll start to see a slowdown, especially when economic data comes in, GDP numbers, non-farm payrolls. And we'll start to see a slight decline in markets and the economy as a whole, which could hit a lot of these stocks. Now, the more resilient ones, it seems that Apple is not defeated and Apple is invincible, just like some of these other stocks on this list. But you can use this to identify some of these key divergences. You can see how many people are actually buying Norwegian cruise lines, and our cruise line is going to come back. Our cruise line is going to operate. Probably not immediately. You can see how many people bought it because it was super cheap in comparison to where it was, anticipating that price will pop back up to that $50 level. Well, we're trading near that $10 level right now. We're currently at just over 15 bucks. But you can see how many people think that this is a super cheap stock that's about to pop, right? Is that on the Fed's list? Probably not. Good short opportunity? Probably. As we can see the stages continue and increasing cases, we might find a lot of opportunities in a lot of these stocks just based on Robin track right here. So again, like some of these stocks are pretty strong. You can see Microsoft, no real divergence. There's a lot of retail money going into this, but the stock is really strong. There's a lot of just institutional money in this thing as well. So a lot of these stocks, a lot of the bigger names are a little harder to start shorting, but we might get a chance in those. So I wanted to show you guys a top 10, top 20 stocks here on a Robinhood, whether they may be good buys or sells in relationship to the Fed actually buying their corporate debt, right? So Ford and GE might have seemed like good shorts, but the backing of the Fed kind of makes you second guess that. Disney, Microsoft, Apple, all pretty strong names, strong stocks, which have been chugging along and moving to the upside fairly well, and we could see a little more upside in those being super resilient stocks. But what does Robinhood say? There's no real divergence either there, right? We don't want to follow the retail money. We want to follow the institutional money, and there's not a lot of institutional money in this market as of yet. So could we see a potential downturn in the coming months? Totally a possibility. We'll see how far the Fed manages to prop these financial markets up. Now, this is a quick little tool. I want everyone to check this out. Check out Robin Track and identify what debt the Fed is buying before making these investment decisions in a potential downturn in this market before jumping in. So this is Victoria from TRADEPRO Academy. I hope everyone really enjoyed this video and got a little background in that, what stocks may be popular, what stocks may not be popular, and drop a comment down below if you guys have any insight. What are you guys looking to buy? What are you guys looking to buy in this potential downturn or this potential rally? Do you think we are going to get a downturn? Comment down below and we'll see you guys next time.